Oh my God, stocks rocket higher today. What drove this rally? Does it continue? Are we just climbing all of worry? There's nothing wrong with that. And no matter what, the naysayers are going to say, but we're still not past the Fed yet. We're still not past inflation. You know, it's a rally. Enjoy it. If you're timing the market and you got out of the market a week or two ago or 3 weeks ago because you just were convinced the market was going to go lower, and now here it is higher. Markets are up. Major averages up about 5% this week. By the way, you can't invest directly into an index, but you can invest into a security that tracks your mimics an index. Major averages are up about 5% this week. That is more than the markets were down for the entire month last month. So here we are. And all of a sudden, things are looking rosy again. This market is quite kinetic. It is quite schizophrenic. So we'll dissect this. Stick around. We're going to just roll a quick intro, and then we're going to talk about what made this market go up, the two most important stocks in the world right now. There are two stocks, that are the most important ones in the world, but one of them just sent us an incredibly positive message for the economy. Here we go. All right. Thank you very much for joining me. My name is Mitch Goldberg. You're watching Be the Boss of Your Money. The show is about a lot of things, but what I want to say mostly, it's not just a market update or a market recap. It's not just a market recap or market update. I don't just regurgitate the news that you're already hearing on the radio or on TV. That's not what this is. I do a lot of that, but only with perspective. This show is all about adding perspective to the news, to the stats, to the things that we are often led to believe are very important. We break them down. We give you perspective so that you can actually process all of this information overload. And more importantly, so you can get to the conclusion that once you have your investment plans, financial plan set, based on your goals, your risk tolerance, your time horizon, you really don't have to react to any of this. It's just the daily news that changes from day to day. Trends emerge, then trends change. Then we have a bear market, then a bull market, and the beat goes on. And we know this. Intellectually, you know this. But then why do investors make the same big mistakes all the time? I get this once in a while. Maybe we should just go into money markets now. Money markets are paying 5%, although by the looks of it, there's a chance money markets aren't going to be paying this high of an interest rate in 6 to 12 months. It could be lower. There's a chance that you're going to forget inflation is coming up. My partner Bobby was on my radio show this morning. He made a really smart comment. He said, the investing clock doesn't stop on your retirement date. And we were talking about that. It's such a smart way to put it. It goes on. Retirement, look, it's not a guarantee, but retirement could be 20, 30 years or more. That's the most expensive time of your life. You think putting kids through college and paying off your house is expensive? Wait till you're retired and you don't have any money coming in. You're living off your passive income, your fixed, your investments. Okay. So, and then we're updating our website now, and I said to Bob, we really need to work in the word retirement more because that's what it's all about. And he was like, but retirement's like such a buzzword. And I'm like, we saw this gentleman, Dr. Joe Coughlin, who's with the aging lab with MIT. We saw him speak on Saturday. Yeah, we were in Dallas last Saturday. We were in Dallas for a couple of days last week for wonderful investor, a financial advisor conference. Basically, education on how to work with the aging and how demographics are changing. Just it's a really important update and all the latest updates in this technology suite that we use every day. But anyway, I think the word needs to be replaced. Retirement could be replaced. I think what we need to do is we need to plan not for retirement. I'm not saying don't plan for retirement, but I'm saying there's another word that's not quite as much of a buzzword right now. The word is longevity. We need to plan for longevity. And anyone who just says as a financial advisor, we're helping you plan for retirement, you have to plan for longevity. You don't plan for retirement and then stop planning. Your retirement years for some people are going to be more years than their working years. Think about that. Not everyone. And a lot of us, because of longevity, may be working into our later years. It's not so crazy to think about working until your 70s. Statistically, there is a risk in planning to work longer in order to be able to retire and have more money in retirement. The risk is that a lot of people who retire early, I'm going to say 64 and younger, they're not retiring by choice. They're retiring because of a health problem or a job problem. Maybe the job is outdated. Maybe they can't get gainful employment, or at least employment that was enough to pay what they were making before. So there's a lot of reasons why people retire, and not all of us who are planning to work longer are going to be able to work longer. And I do realize that if you can't work longer because of a health problem, it could also mean your life expectancy is not going to be as long as well. That's a sad thing to think about, but it's part of the planning. It's part of the investing process that we go through with our clients. It's not all about rosy illustrations and saying, oh, you'll make, 9% in your investments. You'll take this much out. You'll spend that much. We're going to do great. Everything's fine. Build up your confidence in a false and misleading way and say, now give us all your money. That's not what we do. We get very realistic. We do something called Monte Carlo simulations. I just said stimulations. That's so funny. Monte Carlo simulations. Faux pas. This is a live show. I can't even edit that. So, and we do have to show people. I think it's part of our fiduciary responsibility. I do think it's part of our responsibility that we show people that there's a good chance that they're not going to succeed in reaching their longevity goals, their retirement goals. They just don't have enough. That's a problem. And there's different things that clients could do. The thing not to do is to take so much more risk with your investment portfolio because you think you could make up lost years of not proper financial planning and good personal habits in your latter years in the back end. Once you're playing catch up like that, you're probably not going to succeed. Plus, if you take too much risk, the odds become so overwhelmingly high that you're going to set yourself back even further by taking too much risk and speculating. Yeah, it happens. Okay, the market was up. Let's take a quick look at a couple of things. Let's take a couple of fingaroos. That's what we're going to look at. Okay, here we go. So pay attention, folks. The market, the S&P 500, was up over 1% 2 days in a row. This is the first time this has happened since February. So we've had to wait almost the entire year to see this kind of rally. This is why we say you need to stay with the rally. Or I'm sorry, you need to stay with your investments. Don't let the market or the news push you around. We always say this. It does to a lot of people. That's why you need to check out clientfirststrategy.com. Reach out to me. Talk about becoming my client if you don't have someone already, or if you're looking to maybe switch to a new service provider. Maybe we can help. We'll talk, okay? Shameless plug. Dow Jones up 564 points. NASDAQ up a whopping 232 points. S&P up almost 80 points. We are having a big rally this week, makes up for the entire loss of October and then some. Gold up a little bit. Oil up. Okay, so oil was up. Oil stocks were up. Oil was up. $82 a barrel, but still, I just filled up my tank at $3.39 a gallon last night. The 10-year down to 4.6%. So what's the driver of this market? What I just said, the 10-year, 4.661%. 4.661%. It's like a tongue twister. And it just hit 5% last week for like a second, and the week before, and that threw everybody off the game. And we've got to change how we discount the valuation, discount rates for stocks. All these numbers are flying around. And now you're hearing people all over the place, the bears, because when things are bearish, bears get all the attention. And they go, well, now we think, 10 years could go to 6%, maybe more. And here we are, well under 5%. We had a huge clobbering of the bond market. We just had a huge rally. Bonds rallied, which is what sent interest rates down. And here we are, 4.661%. One of the things I've been talking about is interest rates and the incredible opportunity investors have today. But a lot of those remarkable opportunities in the treasury market, they're still pretty good interest rates. But man, oh man, were they good the last couple of weeks. And people just kind of, I'll wait for higher rates. It's not, no, that's not how we value. It's not how we value bonds. It's not how we make interest rate decisions. Being able to time the bond market and interest rates is the only thing that's harder to do than timing the stock market. And we all know how hard that is, right? If, let's say, for example, 5% on a 10-year treasury bond meets the bogey for you, your bogey to hit in the bond portion of your fixed income allocation. Well, if 5% is the bogey you need to hit for your fixed income allocation, and you have an opportunity to actually buy a bond paying 5%, that's a treasury bond, for example, that is guaranteed by the full faith and credit of the United States, which is as safe as you get, right? And you pass it up. What are you doing? You got your bogey. So this is how I choose interest rates. This is how I trade interest rates. I don't really trade interest rates. I invest in interest rates. If a certain interest rate meets the goal for a certain client, then I'm taking it. It's not a matter of, do I wait for interest rates to go higher or do I wait for interest rates to go lower? When I see the number that makes sense for my clients' goals and their fixed income allocation of their portfolio, we're taking it, because that is a much better way, in my opinion, to make your decision. VIX down to the 15s. Let's take a look at interest rates. We're going to be flying through this now. Interest rates. Look at this. Look at this. Feast your eyes. The 2-year below 5%. Remember what I always say. When the 2-year yield goes below 5%, stocks rally. Goes back up 5% and above, stocks fall. 5% is that mark where people just say, I'd rather put my money into a 2-year bond, 5% to take, the risk on a stock. But then stocks go up, and then people say, but you could get 3% in the dividend yield, plus the dividend yield could go, plus you have capital appreciation potential in the stock, which is, I think, for me, long-term, that's how I think. But for those in the last couple of years, especially you baby boomers out there who are buying dividend stocks, paying any valuation because a stock paid 2.5%, but it was a blue chip, now you're down 20, 30, 40%. And you see that buying a stock just for the dividend and because the company has a quote-unquote good name is a really bad reason to buy a stock. There's a lot more that goes into picking a stock than just that. Let's see what really, really led the Dow. Okay. This feast your eyes. Home Depot, big stock of the Dow, was up 7.9%. Caterpillar up over 7%. Goldman Sachs up over 6%. Amgen up over 5%. And then McDonald's, Chevron. Chevron has been getting clobbered the last couple of months anyway, but Visa, United Health, American Express. Look at all these big gains. Okay. I'm surprised the Dow wasn't up even more. In any event, there was only one stock that was down. Travelers was down 0.3%. All right. We're 28 out of the Dow 30 stocks were up. One was flat, which is Merck. Unch. One was down, a drop. But these are the stocks that make up the Dow. And when they go up, the Dow goes up. So what is the most important? Oh, I have a quick commercial here. You have to check this out, okay? I was writing an email to somebody, and I want to know if they could speak around noon one day next week. And I wasn't sure if I should capitalize noon. So noon on its own just refers to a time of day, not a specific person or company. As such, it's not considered a proper noun and has no need to be capitalized on its own. The only time where it should be capitalized is in the case when it starts a sentence or when the word noon is part of a bigger title or name. So if you say, hey, let's meet at noon, or hey, do you want to meet at noon? Noon is not capitalized, but a lot of people capitalizing it. And I just wanted to know once and for all, these are the kinds of things that, I look up, I guess. It's good to be me. All right. Apple is not the most important stock that I was telling you about, but Apple is down 3.65%. Aftermarket trading stock is down over 10% from its high. They had an earnings revenue miss. Things in China aren't going so good. With its high valuation, investors are starting to wonder, do we value it as a software company still, or do we value it as a hardware company? Hardware companies get much lower valuations. Costs money to make a piece of hardware. But software, once you make it once, you can resell it over and over and over, and it doesn't cost you anything because it's just a download from your computer or your phone. So Apple is in a conundrum, and this is the type of stock. It is such a big stock. In fact, it's the biggest company in the world and certainly the biggest company in the S&P 500. And if it drops 3.45% tomorrow, that could impact the S&P 500 in a negative way. Maybe not supremely negative, but it's not bringing everything else down. We shall see. I'm not making any calls, and by the time we get to tomorrow, it could already be up. We'll see what they have to say. Just cool your jets, okay? But what's the most important stock that I want to talk to you about? I have to type in the quote, and then we get to go home. Well, I get to go home. You're watching online, okay? By the way, once I finish the live stream, you could watch in the replay. It's always on my timeline. So if you can't watch me every day in the live stream, just follow me. Check my profile out. I'm streaming to LinkedIn. I'm streaming to my Facebook business page, Client First Strategy. I'm streaming to YouTube, Client First Strategy. So you can always follow me there. And I sincerely hope you do. Okay. So let's take a look at this headline first. Okay. Shopify shares surge 22% on earnings beat rosy guidance. Okay. And how did this stock do today? It was up 22%, up over almost $11. Why is this so important? Shopify is like the lead. It's the lead provider of internet retail for small business. And if Shopify is doing well, and when you order stuff online, you're on Shopify. And like, why am I always on the Shopify app? Every time I track a package, it's through Shopify. I go to an online seller of shirts or shoes. I click it. It's through Shopify because Shopify provides all this internet infrastructure to small businesses. You outsource it to a small business. Not everybody can open up fulfillment centers like Amazon. So you outsource the technology to Shopify. And when small businesses are doing better and selling more stuff, it impacts Shopify. If Shopify is doing this much better than people thought, you have to believe that maybe small business is doing better than you thought. And that, I think, is the biggest driver of today's market rally, which is really, to me, an underrated reason at the moment. But this is significant. So, thank you for watching. Have yourselves a great evening. And I'm going to go. If you have any questions, ask me in the comments. I will see them even after the live stream. And if you're watching the replay, thanks for joining us. If you don't mind, give this a thumbs up or a heart or an applause or wow, whatever reaction is available to you, depending on which platform you're watching on. Help spread the word to the rest of your contacts and friends, and we all get to share in the benefits of higher education. Thanks so much, guys. Talk to you tomorrow.